How's it, guys? Welcome back to FX Rhapsody. Today's video, I just want to talk about a little bit of, let's call it risk management. And I just want to show you confirmations of where I would enter a trade and then when I would exit a trade and, take a loss and then wait for the next setup. Before we hit the charts, just go visit my website. It's on the bottom left corner over here where you can find my previous analysis, previous strategies, and many more videos regarding trading. Also my preferred brokers. These guys are absolutely brilliant when it comes to having a reliable broker behind your side. Just go check them out. And then also there's some nice resources that you can download as well. Okay, so let us hit the charts. So risk management and entering and exiting trades and all that kind of things. I've had a couple of people asking me, especially when it comes to your Fibonacci's, where do I exit? Is it the right direction? And all that kind of things. So I just want to show you, this is the Euro USD. And then also I'm just going to show you just a couple of entries this week and then what I would have done and, if it kind of went the opposite direction. So let us look at the hour time frame. So obviously this is the hour time frame where I ended off my previous analysis, where I always draw my two lines that we're looking at. And then these two lines is just basically indicators to, if price goes above it or below it, we react to what price gives us. So the week started off, a couple of, areas that the price pushed above this line. And then we had a nice rally upwards. Okay, so with this rally upwards, I'm just going to pull it more to the side because this is now, when the week starts and it goes and eventually it pushes above that, you just pull it to the side and just see how price reacts over that. So drilling down to the 15 minutes. 15 minutes is always a very good time frame, to enter your trades and to just view them as well. So we have a sideways movement, price tapping above it the whole time, and then eventually we had a nice big break above this line that we drawn in. Let's call it a resistance line turned support. Now eventually, as you can see, price going up and then making a retracement. So if I just go back to the hourly time frame, okay, because we need confirmation of your trades. So as you could see, with the price pushing up and then going up again and then having a nice pullback. So this movement over here is a nice retracement for entry. And also what you can see is with that movement, there was a nice big fair value gap that was created in the market. Okay, so you highlight that area in the market. Now the fair value gap, again, for those of you that hasn't seen it or don't know about it, it's this big push of the bullish candle. And then in between these two candles, the next candle and the previous candle, there's a nice imbalance in the market. So you have a block that you pull it to the side and you wait until price comes back into that block. Okay, so where do you enter your trade when price retraces back into that fair value gap? And that is where you start drilling down to your lower time frames and you use your Fibonacci. Now you have this block. Let's just make sure that it is on the 15-minute time frame as well, because that's the area that we're going to be entering our trades. Okay, so there we go. So that's the nice little block that we've pulled, the fair value gap block. Now obviously it looks a bit different on this time frame, on the 15 minutes, but keep it in because that is the imbalance that happened on the hourly time frame. So what you do is now, excuse me, you pull out your Fibonacci and you have your Fibonacci from this low to that high. Okay, and I'll show you now the reason why I'm doing it like that. You have got up and down candles, and then you have a nice push upwards and then a retracement down, and that will be your next low. So you have it from this low and then price started moving up. So now the first high that reached here was this one. So you had a retracement downwards, but it did not go back into your 62. And then eventually, or just the very next couple of candles, it pushed up higher, creating a little bit more of a high. So that is the area that you put your Fibonacci from the tip of that candle, or the very high of that candle, so the top of that wick, and then the bottom of this week, the very low of this. So that is your low and your high. Now you wait for retracement to the 62% area. Now what happens is you place your trade, and I've had a couple of guys asking me, what I would do is place my trade as soon as price breaks that 62%. My risk for this trade will be just below this fair value gap block. I would have it just below that 79. I do not like price because a lot of guys, I have talked about this, you have your risk below the 100%. But if you look at that, it's a lot of pips that you're risking. So confirmation for me is literally this fair value gap block. Because if price closes below this fair value gap block, then for me, that is not a trade. I would like to see price closing within this fair value gap block. Okay, basically retracing back into it and then start moving up. So my risk is going to be shorter. So I would have it just below that fair value gap block. Sometimes you do have a candle that pushes right through. So just to be safe, that's the area. So you have a 15 pip risk instead of a 32 pip. So it's basically half the amount of risk you would have had. Okay, so that is the area that you place your risk. And from there onwards, you start writing out your trade. All right. So that is confirmation of entry and where you would place, or where I would place my risk, and then you have your reward upwards. So that's the first trade. And as you can see, price started moving up. Okay, so then more confirmation of price continuing upwards. You have this nice movement, and then you have another retracement back. Okay, so now you look at your second entry. So you could wait. For those of you that didn't take this first trade, you can have a second entry, or you can just add on to your current entry for those of you that wants to be a little bit more venturous. So again, you have your swing low, okay? Then you have a swing high. Just going to show you. So you have a swing high, price not retracing back to that 62. Then it went up again, so you move your Fibonacci to that next high. And as you can see, price not retracing back to it. It just carries on upwards because we're looking at a 15-minute time frame, guys. Then eventually it created a nice, basically a higher high, or a high higher than the previous one. And then you see price started moving downwards. So now this is now the instance, and now you wait for it, and eventually, I'm just going to take this out, and eventually you see price retracing again to that 62% area. Okay, another entry you could have taken right there, and your risk again for me just below that, because now we're still looking at this fair value gap, right? So you can see this is still in play. So that price just touching again into that fair value gap that we had just, and then this is a smaller risk, if you can say that, and then price start moving up again. Okay, so that's the second entry that you could have taken. So either you missed the first one, and this will be your first entry, or you could have just added to your second entry. So now you have two entries running, or two trades running in your portfolio. So now eventually you can see price moving upwards again, and then a lot of guys go, okay, now we're looking for next entry. Now if you take your Fibonacci from this one, from this low to that high, okay, again, look at that. So it's again touching that area. Okay, so a lot of guys would say, no, that's not an entry. Fair enough. If you're not willing to take that entry, because it is not, it's very close to that area, then leave it. Then wait for the next one. Okay, there. To there. And you carry on. If you're not in a trade before, this is not a trade I would take. Okay, this is not a trade because it's not retracing back to the 62%. If you missed your previous ones. So there is a lot of trades in your setups that you're not going to take. Okay, that is definitely not worth taking. And as you can see, all these ones not retracing back to 62. But my point is, guys, please have your risk in place. Never trade without your risk. Okay, so again, we're coming back to there is a fair value gap. Okay, there's a fair value gap that was created in between these two candles, right there. So I think it was a little bit up. Yeah, it's basically right there. But fair value gap was created, and that's going to be confirmation. Okay, that's going to be confirmation of, just there. It was confirmation of your trade going into that fair value gap, using your Fibonacci, not over leveraging, number one, okay, because trading with a proper risk, you don't over leverage on your trades. You make sure that what you have in your balance or in your account, your equity, if it runs against you, if it hits your stop loss, that you will still be able to trade the next couple of trades. So don't over leverage on your trades. Make sure that you have nice small risks. Don't over risk it. Don't have a big stop loss, especially for those of you just trading, day trading, and having it on the 15 or entering on the 15 minutes. Okay, so make sure of that. And use different methods for confirmation. Don't just have one confirmation. Okay, don't just have the Fibonacci as a confirmation. Use the fair value gap or whatever other indicator you think of using or is working for you. As long as you tick boxes, then and the trade is going your way, then you will be safe. So I hope this makes sense. Again, nice couple of entries that you could have had. I mean, if you just zoom out a little bit. So again, just showing you the amount of pips already running. It's almost 200 pips on this one currency pair, you know, this week so far, and we're halfway through the week. So just be patient. Don't just jump into any other trade or any trade that you see or think you see. Be patient to when you're trading. Wait for your setups. Wait for that retracements. Wait for that fair value gaps to form. And again, then you will be profitable in your trading only if you sit on your hands and wait and don't just jump into any other trade. So guys, I hope that makes sense. I hope you enjoyed this video. If you did, hit that like button, hit the subscribe button, the notification bell, comment in the comment section and let me know what you think, and let me know if there's any other areas in your trading that you're struggling with, and then we can see if we can make a video about it and we can, you know, help you along the way. So guys, that's all from my side. I hope you enjoyed it. I hope you're having fun this week. I hope you're making lots of profit, lots of pips, and stay safe guys, and happy trading.